So it looks like there could be more pain ahead in the market as people are starting to digest over the weekend sort of what Fed Powell has said about raising interest rates. You guys know it's 75 basis points, and people are kind of like, okay, well, how much pain can there be? And come Monday morning, I'm just telling you guys, Wall Street will come back to work and then sort of have these sort of team meetings of like, okay, what's our game plan? According to this, you guys can see this here. It looks like tech stocks might face another 10% downside. So there certainly could be more pain ahead. Now, be aware that your stocks may be different. When you say like tech stocks, that's the NASDAQ. So that's going to be like your Google, your Apple, your Microsoft, that kind of stuff. If you're like in the high beta stuff, meaning that things that go, double the market, you could be looking at 20, 30% more downside. So do be aware. Those are the kind of stuff that would be the unprofitable companies that could really feel a hit. The other thing is too is when you take a look at the average bear market, it's something like down 35%, but then from bottom to top, you could theoretically go up 20%. So that's how volatile bear markets are. As you guys know, we talked about Goldman Sachs. They have already said, hey, everyone, we're looking at a 3,600 price target for the S&P, which is basically where we are now. So they're kind of predicting flat to where we are now till the end of the year. One thing is too, do be aware though, September does tend to be the weakest month in the market out of the year. So you could see a bit of a bounce. I mean, I can't tell you 100 what's going to happen, but I'm trying to give you a general sense of where we are. So year to date, NASDAQ's down 31%. If you guys were watching this channel last year, I was telling you guys tech's probably where you don't want to be this year because I lived through .com, I lived through 08-09. I just knew there'd be way more pain in tech and in growth stocks. And I was saying, hey, everyone, be in cash, be in dividend stocks, and also be in bonds and things of this nature. And this is what we've been talking about. And so, I'm not crazy. The thing is like we're going to be retesting the lows of back in June. Will it hold? Will it not? We're going to find out. But certainly, I'll just say it looks weak because the main thing that I'd ask you is, are we better off today than we were in June? I would say no. I think it's an obvious no. Interest rates are higher. And also, too, the war in Russia seems to be getting worse. And now we're facing tensions with U.S. and China. Also, too, you guys know this, FedEx and many of the transport stocks basically reporting a slowdown. They're not hiring. They're closing down offices. And this sort of represents the global economy, especially when the FedEx CEO is like, I think we're facing global recession. And you know this because they have their own internal numbers, which is different than, say, someone trying to predict what every single company in the market's going to do. That's hard to do. But a particular CEO in their company, they know, what their business is. They know what each office is. They know kind of how their forecasts look, et cetera. And they're thinking we're getting slowed down going into 2023. The other big one as well is like, how are the markets responding? So one thing that's really scary for people in England, I'd love to have our British friends chime in. The pound sterling is at a 50-year low? No, 30. It's like a 37-year low, I think is the number. They keep tossing different numbers out there, but basically it's really, really low. And they're saying it's the biggest tax cut in 50 years, but they're also at a 37-year low in the currency. And when you give out these massive tax cuts, people are worried about deficit spending, essentially, is what we're talking about here. And one of the things that I think is really interesting is essentially the dollar has been the best trade. So as you guys know, we decided to come to Korea when the currency was strong. And I kept telling you guys, if you want to go abroad, live abroad, this is the time to do it. The best one would have been if you would have been short the Japanese yen, basically dollar to yen, you're almost up 30% the past year, which is really crazy. You can see this 29.87. We'll see, and because I get it, guys. It's like, well, how long can this go? I mean, there's going to be a bounce back in other currencies, you would think, but I mean, I keep checking these numbers every day. This is the dollar to the British pound sterling. You can see this up 27%. The dollar is just really strong right now. Dollar's also strong to the Korean won, up 21%. It's just insane. And you can see this as well. Now, the yuan is a little bit different. It's a little bit stronger than the other Asian currencies. The big fear, though, here is what's going on with the whole housing and real estate debacle with the Evergrande thing. Basically is a whole domino thing. If one person stops paying, then a whole bunch of other people can't pay and more people can't pay, et cetera. And it made it turn out be a big pyramid scheme. So you got these fears and everyone's retreating to the dollar, and you've seen a lot of strength in the dollar. I keep checking these treasury yields here. The 2 years at 4.28. So why mess with stocks that could have a potential downside of 10%? When you get that guaranteed 4.28, or even on the 12-month is 4%. Generally speaking, when the 2-year is above the 10-year, that signals recession. So, I mean, it's pretty obvious right now. I mean, you got the 10-year at 3.76. I mentioned to you guys before, Series I bonds, if you're not already in these things, you can't put all your money in there. Let's just be flat. Flat. You can't put all your money in these things. But if you want a decent savings account, it's like 10 grand max a year. 9.62% return is totally fine. It's totally fine. And I remember early in the year when I told people about this, they're like, why would I want to do that? I want to be in stocks because stocks are going to make me way more money. Well, no, they're not. I mean, if you look at what they've done this year, again, the Nasdaq is down like 30%, something like that, and S&P is down 20 something. So I'll take that plus 9.62 over down 2025 any day of the week. And this rate will change again. It's adjusted to inflation, so the rate will probably go down. But just be aware that it's not terrible to be in this thing. If you want to put a little bit of money in it, treat it like a savings account. One thing that's going on is too, which this is a tricky one. So oil is facing some trouble right now and sort of declines, and some of the oil stocks really got hammered. The basic gist of it is that one is you're worried about demand going into recession. Are people going to be wanting to buy oil? Then the other thing is, are countries that are developing nations, are they even able to buy oil? The basic gist is because their currency is valued so low, they just don't have the buying power because oil is often traded, or always traded, I should say, in dollar. The other thing is too is we got reports a couple of days ago that Hong Kong is going to be opening, but evidently, I guess not. They switched around. That was a fake out, I guess. I mean, it's saying here they can't quite end the travel restrictions, so we'll see. There was some hope that they were going to open up again and get tourism going. I know Japan is serious about opening, and I think Korea. My wife and I we're here in Korea. We're talking about that. They're starting to lift the mask requirements. I think that was today was the first day that you don't have to wear a mask outside. Say if you go to a sports stadium like a baseball stadium or something like that. So things are starting to open up a bit, but China evidently is not open, and people are just worried about global risk. And another thing too, if you guys understand sort of why, one of the reasons why the tech stocks are down and why we're worried about other countries. If you're a Microsoft, if you're an Apple, if you're a Nike, if you're any of these products that sell goods overseas, and if suddenly the currency that they're buying your goods, so let's say in Japan they're buying tons and tons of iPhones, just for example, and like the Japanese yen's down 30%, right? You're not making as much money as you thought you would. And this is a real concern for international companies. And there's so many companies out there that essentially all the big tech ones are global companies these days. And so, what some of the companies that are doing okay, but I mean, the whole market's hurting at the moment, are the ones essentially that are insulated from global positioning, right? So just keep aware of that if you're kind of curious. But generally speaking, people are going to bonds and cash and safe stuff like that. They're also getting these crazy reports. I've noticed the last couple of days is now the banks are really starting to hedge against and also talk about how do we, decide or what do we do about the risk if China doesn't invade Taiwan. This has been the talk because the basic gist of it is that people are just getting nervous because Russia is dragging out this war longer than any of us want, and China is a partner in that, right? So they're funding the war. You could just certainly make the case India is funding the war as well. Iran, North Korea aren't necessarily funding the war, but they're certainly sending weapons to Russia. So whether or not the U.S. would actually put sanctions on China remains to be seen, but the banks are already starting to price that in, and that's sort of why you're seeing many of the Chinese equities go down. One thing that's happening too, which I've talked about many, many times, if you do want growth in terms of developing world, it's going to probably be India, Vietnam, and I guess Indonesia is doing okay as well. We've been starting to talk about Indonesia a little bit more. I do appreciate someone in comments occasionally is from Indonesia, so I'd love to hear stuff on that. And basically the gist of it is that production in China has been strained due to COVID lockdowns, also to U.S.-China relations. And the strategy that many companies are having right now is like, okay, we're going to stay in China, but we're going to add one or two extra countries, I should say, to build these things. And you can see here, Apple's already starting to think about moving a lot of their production over to India. And this is a real thing. And so, I would say India, Vietnam, maybe Indonesia. And I'd love to hear you guys' other thoughts. My opinion, the Americans should eventually invest in Africa. But it's tough when you're investing in the development world. It's really, really tough because there is a lot of corruption in many of these countries. And this is just real. And also, too, the infrastructure is not quite there because even if you have a factory, you need roads to get your parts from the factory to the ships, et cetera. So do be aware of that. Now, in terms of like how much farther we could go, let's take a look at the updated numbers. So this is the S&P 500, the PE ratio. So we're currently at 18.66. The trend line, the mean, is about 16, and the median's around 15. So we're still a bit high according to historical to rates, right? I mean, you guys can see it for yourself. The PE ratio, the multiples are a bit high. Also, too, we're going into recession, so I would expect multiples to go down. So if you don't understand what this means, this is just taking a look at the whole entire stock market. what are the prices of stocks related to how much money companies earn. And people are fearful that essentially companies aren't going to earn as much money due to currency exchange, due to supply chain concerns, and also due to rising labor costs. Another way to take a look at this as well, this updates every Friday. This is the Buffett indicator. We follow this, and I show it to you a couple times a week, but this is reading about 24% over the trend line. Take a look at this stuff for yourself. You guys learn this stuff. It's pretty easy to look up. This is the Buffett indicator. Basically, this takes a look at the total market value and also compares that to the GDP. That's the ratio you got there. So a couple things can happen. GDP growth, right? The country could get booming again, and that would bring the Buffett indicator down, or price of stocks come down, or both, right? Price of stocks come down or GDP goes up. But the thing is, it just doesn't seem like we're going to be growing that much because the Federal Reserve keeps raising interest rates, and it makes it tough to grow. But that's the idea. We got to slow growth because we got to fight inflation. Otherwise, you get prices spiraling out of control. And inflation hurts the people at the bottom of the income spectrum the most. And that's sort of something why the Fed is always talking about, hey, we're keeping an eye on prices. We're concerned about people, what's going on with their rents and their food and electricity, these kind of things. And this is why you don't want inflation like running rampant forever. The other thing is too, is like the other indicator I'm looking at in terms of like how, bad this thing could get. Unemployment is at 3.7. I think at least needs to get to be 5, maybe 6. Just keep an eye on these things. And that's why I started making these videos, a few months ago. You guys probably know we talk about jobs, careers, these kind of things, because I just think some people are going to lose their jobs, unfortunately. And this is just something you want to pay attention to. And then the last thing is, my opinion is when the market will finally be winding down is what's going to happen with the Bitcoin, the crypto, and all of your risky assets. As the dollar seeps, it sort of like pulls out of these things and goes back into just holding cash, right? Where people are like, you know what? I'd rather have dollar over Bitcoin. You're going to start to see that. So, we'll see. I personally think this stuff is worthless, but I get it. Some people really like this stuff. But however, you can see this year to date, Bitcoin is down about 60%. So it looks pretty weak, pretty bearish. The other thing is too, what you're seeing as well is, people are pulling out of their more risky things. So this is Larry Page, one of the co-founders of Google, and he wanted to do like a flying car, flying taxi kind of company. He's like, you know what? We're just going to close shop on this. No one's going to be buying flying cars going into recession. And that's the sort of thing I want you to understand is that sometimes people write in comments and say, Chris, you're just too stupid. You're not a long-term investor. I watch said YouTuber, and they're long-term investors, and they believe in a long time, and we just got to wait 10 years. And this is my response. So if I wait 10 years on Voyager Digital, am I going to get my money back? That's my response. And you can see here, they went bankrupt and the CFO is now stepping down. And again, for people who say, oh, Chris, you're just too stupid. I'm a long-term investor. I watch long-term investors on YouTube. Okay. Well, how do those people sound now if they invested long-term into MySpace? How does that sound, right? How do those people sound if they invested long-term into Blockbuster Video? So this is sort of something I want to just give a wake-up call to you guys about. Just to think about when we're talking about, being an investor, I get that. I mean, I really do. But you want to make sure you're in stuff that like has a reason to last, that is a profitable company, doesn't have a ton of debt, and you're probably going to be okay. So like if you're throwing money into Google or Microsoft or Apple, just for example, I don't think Apple's going to disappear anytime soon. I just don't think so. I don't think Procter & Gamble is going to disappear anytime soon, right? There's going to be companies out there that I think are going to be okay. But if you're in your like really risky stuff that's not profitable, hasn't been profitable for 10 years, and they're in a market like, for example, you'll see some channels like say, hey, everyone, frozen food is the future, and plant-based food is going to be where everyone's going to be shopping at. And it was like, what are you talking about? And so, and I point to, MySpace, I point to Blockbuster Video, I can point to any number of companies. And I understand, for people out there who are young, you have never seen a company go bankrupt before. And one of the things I will say, if the Gap, which is closed, right? That used to be like a really popular store. It used to be really popular. When I was in high school, man, the Gap was like the bomb. And then, as time went, then it was like Abercrombie and Fitch. And as time go by, I don't even know what the kids are talking about. To be very frank, I don't know. You guys please write in the comments, what is the top store? But the point being, things change, right? Things do fail. And sometimes on the channel, we like to talk about our favorite 1980s store. You got to go with like your Radio Shacks or your Toys R Us or like Montgomery Wards, these kind of things. Things do change. And so, this is my response to people say, hey, I'm a long-term investor. I mean, I get that, right? But also understand that investing is carries some risk to it. And especially going into recession, some people are just not going to spend money on things that are not necessary, right? People at the bottom end of the spectrum are struggling enough with rents and struggling enough with paying for their food, let alone, trying to go buy flying cars. so, so even, Larry Page is like, you know what? This is not a winning enterprise right now. So that's my thoughts on the market right now. I hope this guys are helpful for you. I'd love to hear your thoughts as well. Thanks again for watching, and this has been your daily Uncut News.